How's it going, everybody? Welcome back to my channel. Mike here. This is my oasis where I get in front of a camera and talk to you about whatever I want. Today we're gonna get an update on the crazy housing market that we have right now, and really I'm speaking on this because I am at the forefront of this crazy market. In a previous video, I mentioned to y'all that we were liquidating some assets, some rental properties, but also I mentioned that I had gotten offers on my house. I wasn't even selling my house. Guys, recently I got an offer on my house that I just could not refuse. So I'm also selling my house, which in turn means that I need to also find a place to put my family to live in. It's the worst time to try to buy a house. And so I justify the sale of the house, hoping that we'll find something. So it's been very interesting so far. Depending on where you are in the United States, I believe just across the country, every state that you're in right now, chances are the housing market, it's a seller's market everywhere. And I'm based in Atlanta, Georgia, where it's worse because we have a lot of people moving in, especially a lot of people from out west, like people in Hollywood, Los Angeles, because there's a good entertainment industry that's booming out here. So you have a lot of people moving in. Also, people from up north are moving further south, so they're either moving to Georgia or they're moving further out to Florida, and so on and so forth. So there's a lot of new constructions around me. There's also a lot of traffic. That's one way to tell how packed this city is becoming. Anyway, I'm knee deep in the market right now looking for a new house, and usually I'm always approaching these things from an investor standpoint. So I'm usually the guy looking for the house or the property that needs some work, something that the average eye is basically shunning because they don't see the big picture. They don't see how nice this thing could look. If you think that there's less competition with fixer-uppers, forget it. That was my initial thought going into this process, and I can tell you that there's just as much need and there's just as much competition for fixer-uppers as there are with just a move-in ready house. Actually, I think it's worse with fixer-upper because generally speaking, you're competing with people who have cold cash, because you're dealing with investors on this side, and these guys have money to spend all day every day, and so they're offering cash. They're not waiting for a loan, a FHA, a conventional loan to kick in or go through some due diligence that would take 30-40 days. These guys are like, here's cash, we close in 3 days, we close in a week. I mean, I've heard some crazy stories. So on the fixer-upper side, it's been very crazy, and where I thought I could have leverage, I have zero. I'll give a perfect example. Recently, I found a house that I absolutely I'm like, this is it. This is it. We're going strong, and we fix things, and we can have a great house or a beautiful house where we've increased the value. Depending on where you are in the country, and I'm going to speak mostly from the standpoint of the city that I'm in, which is Atlanta, Georgia. Here's the rule of thumb. If you're in the market right now to buy a house or any property, do not dare make an offer that's the asking or even a tidbit more than the asking. You basically have to make an offer that's a good amount over asking price. Even some realtors, as a matter of fact, realtors that I've spoken to, they tell me that they always advise their clients to have a minimum $10,000 over asking. That's just to show you how competitive the market is right now. Not only at least $10,000 over asking, but also do not dare ask the seller for any closing costs. So basically, you're going to be paying over asking, but you're also going to be coughing out the entire closing cost for whatever property that you're looking to buy. Now, from the average person's standpoint, and by average I mean usually people who buy homes are either going through what's called an FHA loan or a conventional loan. And with those, you need down payments. For FHA, you have about 3.5%, and for conventional, you have 5%. Say, for example, you're looking at a house that costs you, let's say it costs $400,000, right? If you take 5% of $400,000, you're at $20,000. So that's a fixed cost. That's a cost that you have to account for. So you've got $20,000 that has to come out of your pocket. Then you now calculate also the closing costs. In the state of Georgia, let's say specifically here in Atlanta, the average closing cost is about 4%. So think of just basically account for 10% of whatever the price of the house or property that you're looking at. So if you're looking to buy a $400,000 house, then you must have at least $40,000 ready to go. Okay? Now, I'm saying at least because chances are when you're looking or making an offer on any of these properties, do not look at $400,000 houses. So say for example, again, you are approved for $400,000. You really want to be looking at properties in the $350,000 or less range because you need room to be able to make an offer over asking. So if you say, for example, find a house that's $350,000, then you can go and play around all the way up to $400,000. And that's really what this market is. Again, as an example, I found a fixer-upper that I thought would be perfect, and I offered $15,000 over asking. I thought that was it. There's nobody that's gonna make anything even close to that because that property needed quite a bit of work. Guys, within a week, this property had over 90 offers. 90, not 90. And from what I was told, that the offer that the seller received was a minimum of $50,000 over asking. That's just mind-blowing. Somebody made over $50,000 over asking for a fixer-upper. That's just to tell you how crazy, actually how stupid this market is. And I say stupid because from an investor standpoint, usually investors know what they're doing, or I hope they do, because investors typically will calculate the numbers well. But from a non-investor standpoint, what I'm seeing happening is just, it's concerning a little bit. So for me, for example, I'm almost certain that I have to overpay for whatever house I end up getting. Now I'm able to take that shock, one, because I can sort of forecast the market and I know the market of the different areas that we're looking at, that I can say, okay, even if I pay, say, $20,000 over asking for this house, this city is doing pretty well, that I'm almost certain that the value of the property will go up within 5 years, right? So I'm betting on that. But for somebody who is not as educated or informed about these things, what you just know is that you're in a competition and you need a house, you need a place to stay. All you want is just to get the house, and you're willing to pay $50,000. I've heard of $150,000 over asking. If you're, depending on the market that you're in here in the US, if you hear of people paying over $100,000 over asking, it's actually common in this market. It's that common. But this is what's concerning about that to me. When you have people taking out loans, and something similar happened during the 2008 crash, although I don't think that precisely what happened this time around. I do think, and I feel like a lot of people are overstretching themselves, right? One of the reasons why there's such a boom right now in the housing market, I mentioned in my previous video, is that one, you have a lot of people who are now working remotely from home, high paying jobs where you don't have to go to work. So that really gave people the freedom to get out of their city or somewhere that they were living closer to work, and then moving to other states, literally moving across the country for a better, more affordable lifestyle. A more affordable lifestyle in, say, somebody who lives in San Francisco, that's like high end in somebody living in the state of Georgia. So, for example, if in San Francisco, or say in Santa Monica, $1 million buys you 500 square feet, $1 million buys you freaking 10 acres of beautiful property out here. You have that migration going on, and then you also have low interest rate, which again encourages more people to buy. So now you have all these things working together, and a lot of people are being really pushed out of the market, which is going to be my second point. So the first point is that I see a lot of people overstretching themselves, and by that, what I mean is right now, all they care about is getting into a house, and they don't care if they're paying $50,000 over asking. In many cases, you have to pay a monthly payment. Now, let's say you can afford that monthly payment now. In 2-3 years, we don't know what the economy is going to be doing, and you could really dig a hole for yourself. For me as an investor, what I'm doing is getting a bunch of cash together now, and when that time hits where there'll be more inventory in the market, chances are I'm going to be buying off some of these people who are overstretching themselves and possibly go into foreclosure and things like that. It's a very harsh truth, but this is what's happening if you're not informed. What I'm trying to say is that if you are in the market right now, I want you to think about what's going to happen in the future. Don't just because you're approved for, say, $400,000 or however many amount does not mean that you have to spend everything. If your current income dictates that you spend X amount of dollars per month, do not overstretch yourself just because you need to get into a house. There's always going to be a house available, although inventory is low. What I also see actually in my market is that a bunch of properties are coming back into market. And the reason why is because, one, the financing fell through, or perhaps you have a lot of people who are skipping inspection, which again, very stupid. Do not buy a house or make an offer if you haven't done any inspection or went through due diligence. But again, because of the desperation and anxiousness that's around this market, you have a lot of people who are making offers without even seeing the property. They just want to beat the next guy to the property, and sometime the house will show pending and boom, it's back on the market, because chances are they found something that perhaps the lender was not willing to give the loan for. So as a buyer in this market, I will always think about that. Do not overstretch yourself. It's crazy, I know, but think about it. Now, is there going to be a market crash? You've heard it. Again, when you think about and you look at all the factors and all the things that you're seeing right now, it kind of feels like what happened a couple of years ago when the real estate market crashed, which is a bunch of loans being given out, doled out to people who could not afford to pay or afford to make the monthly payments. Again, because of different factors in this particular market, I don't think exactly that is going to happen, or I don't even think that will happen at all, because what I'm seeing is people who are able to afford better homes or bigger homes in another state are moving to go buy those homes. But again, it pushes other people out. And this is what I mean by that. So when you think of the younger generation or millennials, for example, younger people tend not to buy, but it's not because they don't have the desire to. It's also because they could not afford it. And the reason why they can't afford it, particularly when you look at what's going on right now, chances are somebody who is older or more established in their careers and have more income will be able to afford to bargain in this market or be able to afford higher prices in this market compared to somebody who's much younger or just starting their careers. Even if you're able to get a loan, chances are you may not have as much savings as somebody who's been working for 20, 30 years, right? Or who has a better paying job than you. So I feel bad for younger people or millennials because they're going to be pushed out in this market. And I already see it happening where a lot of younger people are not able to afford anything simply because they can't compete. They don't have that much cash in hand. But here's the other side of that. On a macro level, as an investor, if you're looking at what's happening right now, just think a couple of more years down into the future. The house scarcity that we have right now will not always be the case. And if you look at the demographic of the US, look at just the US in general, we're older and we're getting older. We're aging. And everything I'm going to talk about right now, I don't want anyone to take an offense to it. It's just me speaking investor language here. So when you think about the US population getting older, and as I mentioned in my previous point, these older folks are usually the ones who are able to afford these houses now. Guess what? The more older we get, people are going to die off, or say grandma or grandpa would now move out of their current house and go live with a family member or even a nursing home. Now, what happens to all of these houses that's going to be left vacant when the older generation either passes or they move in with a family member? Guess what? Inventory is going to be flooded. Now, if you look at that forecast, chances are housing is going to be cheaper. When you have more inventory than demand, everything is going to be cheaper, and people will be able to pick up houses again for peanuts compared to what you're paying now. Basically, what I'm trying to say is that if you're looking in this market, okay, and you currently have a place to stay, and I'm speaking even for myself, if you don't necessarily have to buy right now and you have a place that you can just stay for right now, I would chill out. I would chill out because the odds are kind of against you in this housing market. Things are just very, very expensive because of the low inventory. And if you wait a few more years or even a year from now, who knows what the economy is going to be doing, you may have a better chance of getting a deal. Right now, don't even think about the word deal. Even if you try to create a deal, it's harder right now in this market because everything is just, it's hard. There's a lot of competition and people paying way more for an overpriced house. I've even heard stories of people borrowing money from family members so they can afford a higher down payment or even some of the closing costs. This is the market that we're in right now, at least that I'm in, and I'm hoping that I'll find something sooner than later. But I wanted to update you guys on what's been going on, and hopefully you got educated with all the stuff that I spilled in this video. I will make an updated video in the future if we find a house or not, but I do want any buyer, if you're a buyer in this market, I want you to be very, very careful. Just be smart about the decision. You should still try to find a place, but make sure you're thinking ahead. Don't just think about what you're paying now. Make sure the location that you're looking at, it has somewhat of a higher graph going up, and also think about what could happen to the market now. Do not overstretch yourself. Stay within your budget, and maybe you can compromise on a few things that you wouldn't otherwise compromise on. Also understand the fact that if you're thinking about buying a fixer-upper and adding value to it, that's a great way to go, but it is just as competitive as a ready, finished, move-in ready house. So just take all of that into play. All right, hope you guys enjoyed the video. If you did, please give it a thumbs up. Make sure you subscribe if this is your first time. Thank you so much for listening and letting me rant, and I hope to catch you in the next video. Peace.